Assalamu alaikum and again good morning. So in this session we'll be discussing the continuation of our conceptual framework lesson, more on qualitative characteristics. So this is again the scope of our conceptual framework discussion. So we have started off with the discussion of the objective of the financial reporting, financial statements. Okay, so on the second level, we will be discussing the qualitative characteristics and the elements. Okay, and on the third level, the recognition, measurement, and disclosure concepts. So in the first level, we are discussing the why, or the purpose of accounting. On the second level, we discuss the qualitative characteristics and elements, or these are the elements that will bridge the objective to the output, or the recognition, measurement, and disclosure. So this third level is actually the how, or the implementation of our financial reporting. Qualitative characteristics of accounting information. These are the qualities or the attributes that distinguish better or more useful information from inferior or less useful information for decision-making purposes. This is actually classified into two: the fundamental qualitative characteristics and the enhancing qualitative characteristics. So how do we apply the fundamental qualitative characteristics? So this is the process, no? So first, we identify an economic phenomenon that could be useful to users. Let's say that is a sale. Second, we identify the type of information about that phenomenon that would be most relevant, like what is being sold, how much is being sold, and to whom. And number three, determine whether that information is available and can be faithfully represented. Available ba yung transaction of sale, the information on that transaction, can that be faithfully represented? The amount, is there any transaction that we can, or evidence that we can use to document the transaction? Number four, if available, the application is complete. If not, then repeat the process with the next most relevant type of information. Okay, so as we can see here, we can see the primary users of accounting information. So the primary, the capital providers, the investors, and the creditors, of course, and their characteristics. Okay, so the only constraint that we have is on the cost. Okay, what is the cost of providing this accounting information? So the because we cannot present, just give all the information to them, because that would be very costly, no? So imagine if you will be asked to discuss something that is very broad, and you want to give every information, so that would cost printing, how many sheets of reports, okay, the effort, the time to present that information. So we will have the pervasive criterion, the decision usefulness. Only those information that is useful in making the decision. So those are the cost-worthy information. So those will be given to the users. So we have here for the criterion on how useful the information is to the decision makers. We have two fundamental qualities. First is on the relevance group, and second is on the faithful representation group. So as you can see here, okay, relevance, okay, the ingredients of the fundamental qualities and the relevance, actually we have the two: predictive value, confirmatory value, and materiality included actually as a sub component of this relevance. For faithful representation, we have completeness, neutrality, and free from error. Okay, and added actually just a component of faithful representation is the substance of our form and prudence. So we have here the following 4 enhancing qualities: comparability, verifiability, timeliness, and understandability, which we will discuss later. So next up, let's discuss the fundamental primary quality of relevance. So this quality should make a difference in a decision. Okay, so if it does not make any difference at all, then it is not relevant. Okay, so if an information that will cause the decision maker to be indifferent, whether to choose A or option B, that is not relevant. Okay, so to be relevant, accounting information must be capable of making a difference in a decision. So there are 2 qualities. Okay, predictive value and confirmatory feedback value. So for predictive value, financial information has predictive value if it has value as an input to predictive processes used by investors to form their own expectations about the future. So magagamit siya, as an input so that we can predict, the possible value of it in the future. Okay, so if it is not future relevant, parang sangkos na siya, then that's not relevant at all. It's not predictive value. Okay, so the second subcomponent of relevance is the confirmatory value. So relevant information also helps users confirm or correct prior expectations. So predictive value and the confirmatory value. Another primary quality is materiality. So actually materiality is a subcomponent actually of the relevance attribute. An item is material if its inclusion or omission would influence decisions that users make based upon the financial information. So magiging material siya kung pag isali natin siya or i-delete natin siya, makaka-affect talaga siya sa decision, na gagawin ng user based on that presented financial information. So there are 2 factors of materiality. First is the relative size. So it is in relation to the total of the group to which the item belongs is taken into account. So may mga figures that is very material to us but not material to others. Example, there's an anecdote, a junior accountant, a newbie, she on her first day of work, she was tasked to audit, a company, and she really did her best because she is just a new CPA. So she talagang ginalingan niya, and the next morning, she reported to her supervisor that she really found a very big inconsistency, and that amounts to 12 million. So now her senior looked at the company and said, 12 million, it's okay, forget it, it's not relevant, it's not material anymore, so just skip on that. And yes, it's shocked, so anyway, that 12 million figure may be relevant to someone, that's my point, and it may be immaterial if you put that figure to somebody else or to another company. Okay, so it's relative size. Another is the nature of an item. It may be inherently material because by its very nature it affects economic decision. So talagang may mga information that though small size lang, inherently very material siya because it affects economic decision. Okay, ito yung mga subtle but very critical information ng business natin or ng accounting information. Okay, so next is we have the faithful representation. So at a glance, it consists of 3: complete, neutral, and free from error. Faithful representation means that the numbers and descriptions match what really existed or happened. Okay, so there are three ingredients of the fundamental quality. So we have completeness, neutrality, and free from error. Okay, so on the first stop, completeness means that all the information that is necessary for faithful representation is provided. So if it is a transaction of sale, the amount is given. Okay, the customer is there. Okay, it really existing, no, yung seller or the buyer rather. Okay, um, the amount. Okay, the quantity sold. Okay, so that's completeness. Neutrality. So neutrality means that a company cannot select information to favor one set of interested parties over another. So example is you want to present the financial information as very appealing to the owners. Okay, very appealing to the owners that so and so, so and so. Okay, the operations boomed, we extended, we expanded operations, we expanded new branch or new productions, but you selected the information. You did not include the loans or the financial obligations that you incurred just to expand the operation. So that information is favoring the owners, but that information is actually by choosing to uh, not include the information of financial obligations, that is detrimental to the creditors side, no, because the creditors cannot see the financial soundness, no, of the company as presented. So neutrality means that it should be neutral, whether who is using, the creditors or the owners or the employees or the public, it should be neutral. Okay, so free from error. So an information is free from error. It will be a more accurate, no, faithful representation of financial item. So free from error, like typo error, okay, 52, erroneously placed as 25, or so and so. So also another subcomponents of faithful representation are substance over form, conservatism, and prudence. So substance over form, the substance of the economic phenomenon should be more, no, more of weight than its legal form. Okay, conservatism means that we should choose the one which has the least effect on equity. Okay, so in case of doubt, we record any loss and we do not record any gain. So we're conservative in terms of profit. Okay, so another expressions of conservatism, no, don't count your chicks until the eggs hatch, or let's just put it, don't um, don't demand for a car key if you still not graduated BS accountancy, parang ganon the like. Okay, so next stop is prudence. So to exercise care and caution when dealing with uncertainties, no, especially in the measurement process. So exercise care and caution, okay, because that assumptions, especially in terms of uncertainty, could cause our financial statements to be erroneously or misstatement. Okay, so here are the enhancing qualities as presented. So we have comparability. So information that is measured and reported in a similar manner for different companies is considered comparable. Okay, so size doesn't matter, so as long as you are measuring and reporting it in the same manner as for different companies, that is considered as comparable. So if you are using this if you are reporting this transaction and you are using the same standards and the accounting policies that is being used to different companies, then that is comparable. Verifiability. So this occurs when independent measurers, especially auditors, using the same methods obtain similar results. So let's say how to get gross profit or the net profit, so that's sales minus cost of sales minus operating expenses is equal to profit. So that's verifiability. When we use the same method, we will obtain similar result. Okay, so timeliness means having information available to decision makers before it loses its capacity to influence decisions. So example, um, the we have a business transaction, we have a deal to be made, and we are deciding whether to accept or reject an offer. So if we will wait for the whole, let's say today is just September, and we will wait for until December so that talagang totally complete na yung ano, but the business deal will be happening this September, so we cannot wait for December anymore. Okay, so the information by September, that is timeliness. Okay, so having information available before it loses its capacity to influence decision. So actually, accuracy, and timeliness usually have a trade-off against each other, because if you really want to be accurate, you have to wait until all information will be available. But if you want to be timely, some estimates will be needed and some past trends will be used, So that's the trade-offs. So that's timeliness. Okay, and lastly, we have understandability. It is the quality that lets reasonably informed users see its significance. So, talagang naiintindihan, because what's the purpose of information if the user or the ones reading it cannot understand it, So, we should make the report easily understandable and without complexities. Okay, so that would be our session for this conceptual framework, qualitative characteristics. So thank you for listening, and please proceed back to classwork.